Welcome back, guys. It's Francis Hunt, the Market Sniper. Glad to be back with you. A short update, just given our vid yesterday on the metal side of things, taking a look at gold and a couple of other aspects of the precious metals market. I just wanted to update you today. So what happened today is we got some fundamental employment number. Yesterday I highlighted how good everything was. Supposedly CPI lower than everybody's managed down expectations, and retail, everyone buying more than everybody's supposed to be, depressed expectations. So everything was supposedly better than thought. Well, today we had data, and this time it was an undershoot. So I guessed wrong, actually. I said, oh, it seems like they're creating this, soft landing, soft landing. I'm sure tomorrow, if I was having a punt shot in the dark, I would say the unemployment number, which was due to come in today, which has now come in, will come in lower than the expectations to show, hunky-dory labor market and everything. In actual fact, 100% wrong on that guess in terms of data. I'm pretty bad at guessing data, actually. But who knows? Sometimes I see a trend and sometimes it turns out. But anyway, let's go and have a look at that data, how it came in, and what that meant for gold and silver. Because we were saying yesterday in our previous video anyway, when it came out, that it's looking primed and time to be interested again. We go on the long things. We warned there was going to be a sell-off. We even on silver took a short-term short whilst being heavily invested long, and we did get a spill-off from there. We'll revisit all of those aspects. Why is it potentially even a trading long coming soon, never mind an investing key moment for silver? So let's go to those data and then the charts. So here we go. The data up. So this is the number that came in, unemployment claims. Unemployment claims expecting 221. Previous was 218. So it's certainly getting worse, and the expectation was that it was going to get marginally worse. So you pick up 3,000 new people on the claim side that were saying, hey, I don't have work anymore, give me a bit of welfare, keep me supported, cut me some slack while I refine my feet. In actual fact, it ended up quite a bit worse than 218. Instead of 3,000 jobs more than the previous month, what you ended up with the better part of 13,000 jobs worse than in the previous month. So everybody the previous month is still looking. There would have been some structural changes, and there's a new 13,000. So now what that tends to mean is labor not so strong, actually. That means could point to the slowing on the interest rate hikes side of things, and that will mean perception is a little bit of stimulus. So dollar down, gold and silver potentially up because yields work supposedly against gold and silver. So let's have a look at those charts. So we did a couple of charts for you. In fact, I'm going to start on the macro ones. I've done a couple of draws. Some of you will be a bit lost by this. So let's start maybe on the shorter time frame. This is a daily chart. In fact, why not go right the way back? We're going to do it completely bum about face, and we're going to go small up. So let's go 4 hourly, and we'll end up on this chart in a minute. So if we go 4 hourly, what you'll see is what we were referring to. We were roughly here, this little breakout on a bull flag structure here. So that structure, again, just to highlight, and I pointed out how sometimes you can get a dip. Let's not use the green. I know it's bullish, but we'll go with a transgender pink. Yes, I'm such a modern man. Don't you love the modern men's? Can I use the ladies' toilets, please? No, not me. Anyway, that pops out the top and out you go. So actually today, we've continued on the bull flag that we drew after first testing it out the bottom, smashing back. Before we smashed, we jumped back on the descending bagel. It was a descending grind line, actually. And it was a basing descending grind line. We jumped back on it, we smashed across the whole way, then we paused here, we sat on it, and then we've gone further up. So that is pretty good for silver, because we've got ourselves in and around the gateway of 24. In fact, 24 has traded. I was also getting all my alerts on the gold silver ratio, which will also be worth showing you, and we will go past that as well. So this is the 4 hourly. We broke here, guys. This is a break. This is what we're highlighting. and we sent it through on the Twitter feed, by the way. Don't forget to follow us at the Market Sniper on the infamous X for your Twitter updates. We put that through. Now let's go up to the daily and do the kind of the inverse. I normally go macro to micro. I think that's the right way to go personally. We are doing it a little bit different just for the kicks. But essentially you've also got another flagging prospect all the way up to this level. We'll answer what that level is in a bit. What do you get? This pullback, by the way, that goes all the way down to the last kind of lows on the pullback. So that would be your pole, and quite a lengthy dip, it has to be said, kissing the 22. We believe the 22, we assess, not believe, we assess the 22 to be quite an important level. Don't forget there's that little flag we were showing you on the 4. So now I'm reversing you into this, onto the bigger time frames. You've just had that break. Now where are you on this? Well, you're also having this break. This is what we've been highlighting in the charts over here, in the Snagit snapshots. We are highlighting to you that in actual fact these are also events that are dropping. So let's have a look. Yeah, there she goes. Is that a key break? Is that a key break? So you break on the 4 hour, the flag, and you're moving on. Now you're breaking this larger construct which has a pole all the way back down there. So a couple of things are dropping. Yesterday we gave you the break of the previous smaller flag. That's that event. Now you've trucked on and you're breaking another flag, only this time on a far larger time frame, which then brings us all the way back to probably where we should have started, which is the weekly time frame. In fact, tiny bit, spread it out, shake it about, there we go. And this particular structure is also there, and that was your 30 high, that kind of Wall Street silver bets era, when you had a little bit of hype and hopium, and it got a little bit of all of us getting a little bit excited. This, by the way, gives you the 45 to 50 gateway as a target. We've spoken about that before. And that's why many people say, but what about your target? It hasn't gone away. It hasn't gone away. We're still waiting for it to happen. These are long-term targets. Every single candle is just a week. So it's quite a lengthy time frame, a single candle, actually, to be a week. So this is a very long, goes all the way back. That's the events of March 2020 with a dip in silver that actually got the ridiculous price of 11s. Boy, what would we all do to have that opportunity again? So, bit of a flag to the downside here, so we can let that target go. Let's get more of this detail in here. So, you're breaking here. Now, were you to continue and make this flag's target, you end up at this key level as well, which is a very, very important point, because on the breaking of this larger megaphone type structure from this bull flag, this will commence a very important move to the upside, and something's going to give. Now, I'm not saying it's going to definitely go all the way here and then definitely carry on. It could. The point is we're moving and we're at a very sensitive area. We're getting back into the zone. If this triggers, you're ending on a much larger flag, by the way. So if we clone that, even this target from the lows will be an interesting target and will be very welcome to patient silver stackers and hoarders like myself and like many of you watching. And in terms of that, you're going to be in and around, we need to see the numbers. Thank you for telling us it's dollars. It's such a big thing. We have to move you out the way. You'll be in and around 30s again. So that could take you back to the levels of 30 as well before a possible pause. That's also quite possible because we paused there before. We paused there before. You're not going to get straight run moves, guys. I'm sorry to tell you. It just doesn't happen that way. But we've paused there before. These were all kind of 30, 28, 29, 30 resistance zones over here. To make absolute logical sense, if we were to get through here, break out here, then we would have maybe a possibility of a run and then pull back and break again here before hopefully going forward and onwards to that $45 to $50 zone, which would be long weighted. But now that could be a week, it could be a month, it could be 6 months, that pullback, if it were to happen. So looking bullish generally over there, looking bullish generally, and heading to a couple of key levels that are starting to fall and get taken out. Let's go to both the gold, but also the gold-silver ratio. So we're particularly excited about what the silver is now indicating. And what this means for generally the markets. So again, this chart I've been shown it so many times on so many different videos, and we were getting pushed away here. We were going away from this key zone. This is the level. It's not a level, by the way. Sorry, let me correct myself. It is the basing ascending grind line, which is continually at ever higher interaction points as it continues to ascend. It is not a price level that we are waiting to see chopped. And you can see a lot of little pubic hair wicky wicks that need a bit of trimming, and that point to a bit of stamping on. And there we go. We get the downside. Remember, this chart we want to see go down. We want it to go down. So here we go. That's it. There. Up and down, up and down. We got a bit scraggy. We were thinking about going down. It didn't get what it wanted. It bought more time and went up. It squeezed into a rising wedge. Now we're heading back down. So any sign of weakness in the UK economy, you're going to see the likes of gold and silver probably moving. And boy, let me say one thing that's almost as far as you can ever talk about as certainties that I would expect, and that is weakness in the US economy. In fact, weakness in the global economy all over the place at current interest rates and current levels of economic activity. Things are not well. Of course, you met the criteria of a recession, only they said it's not a recession. Lots of things have happened that actually indicate that there is a lot of print and pretend, bluff, keep the banks going on the backdoor liquidity provision, but everybody else suffers. That's right. That's your Zio central banker control system, my good friends. And that's glee and liquidity for the toxic ones, and punishment and pain for everybody else. Yes, isn't that lovely? What a deal. Where do I sign? Anyway, so that is gold and silver. Let's have a look at gold as well, just within that. Which many of you, obviously, still in the gold market, would like to see. Also, quite a sprightly little performance there. That's on the weekly. So we're just looking on this week so far. So that also, by the way, so there's commonality here, broke that channel to the upside, got back above the 1960 level, which we really wanted to see. And then you can have a look here. Small pullback after the 2000s. We knew about that, but it wasn't as schizophrenic a hit. That's on the daily now. Pullback, and now we're heading back up. Let's reframe that chart a little bit better, shall we? That's it. So now we're heading back up in terms of the market direction, and that's pretty positive. And we're getting the gold-silver ratio going in the right direction on account of silver outperforming gold, which is exactly what you want. It is exactly what you want. You want to see the zip in the silver as well. You want to see the bid coming in over there. And boy, oh boy, wouldn't it be welcome if we were to get nice and up to the 30s before making our way to the 45 levels. Excellent. So that's your quick update just on those two metals. I don't want to make it a long-winded one. The data came in. Hey, there's a bunch of unemployment and people are underestimating the amount of unemployment. Interesting to see. That's more in line with, personally, my expectations of where the economy is, that it is a bit more bleak. By the way, SimpleFX, link below. You can use crypto and trade metals with crypto as collateral. You can trade FX markets with crypto as collateral, or you can trade other forms of collateral that allows you, when you've got a certain amount of resources, if you happen to be in the crypto market as well as the metals market, it's pretty useful. That link's below. Pure gold for purchasing, gold and silver in the links below. Go and get yourself some. This is your own central bank. That is when you are sitting on your own central bank. And yes, the price will have to probably be revalued. Potentially, they could do a full revaluation after trying to get you all to sell yours, which has been the last 30 years of financialization of everything and making the metal so disproportionately cheap that very few people held it. Or they might just try and stop you from holding it in the future, in which case you definitely want to hold it. You definitely want to be owning it because it's almost certainly going to go up, and they'll probably do, hey, this gold thing, it needs to be $25,000 now, given all that we've done, and that silver thing, that kind of needs to be $1,500 now. Hey, how would that work out for you in whatever that new dollar would be, where no doubt the buying power would be greatly reduced? As you've seen over the last 95 years, precious metals are timeless. They don't rot, they don't fray, they don't pick up mold. They will always be the same. Bury it in the ground, pick it up, it's going to be the same. It's consistency and capital preservation times that we are now in, not the search for yield, not the chasing into debt markets and being super clever and we like yields so at this rate and all of this. Debt is a busted flush. Money is borrowed into existence. Too many people wanting to play in as the interest rate gets higher versus your official inflation rate. Your official inflation rate, my friends, is a lie. You are still up on inflation on a previous year, which is a high water mark because it was exceptionally high. So being 1, 2, 3% up on where you were a year ago, when a year ago it was virtually 8 or 9%, is still way too high. And it's going to come back in another surge as the debt markets start to fail. Nobody wants to buy it, and they have to create more money to make those interest payments on all that debt. That's right. So they're going to have to borrow more money into existence, which creates, of course, more debt, and more debt at a higher interest rate that itself will also need interest rate payments. And of course, all the debt that wasn't put out long term is coming back to get rolled. In other words, this level of Ponzi-onomics financing with these level of interest rates after going so low are unsustainable. They will go into a parabola. Inflation will not ever be contained. It will go parabolic. You'll have continual surges. The numbers will be consistently, and you'll be wondering who's doing all the buying, who's living it up, that the prices keep going up. It's because they, yes, your ZIO central banking cartel, are continuing to proliferate to meet the requirements of paying the old debt. Because guess what? The banks always get made whole. Do you know Germany finished its final payment on the war payments from the First World War, Versailles, in 2009? How the hell did that bank that did the borrowing for wars on both sides, how the hell did their contract get honored when entire nation states were torn up? When one of the most vile peace agreements that were totally monodirectional and left Germany absolutely destitute, so that had the Weimar Republic eventually still get payments all the way through to 2009 from World War One. From World War One, my friends. How the hell? How didn't that bank get told to stuff off long time ago? Guess what? It's funny how the debt always has to be paid. For those of you thinking that if there's a debt crash and you're going to get your mortgage for free, let me just point you to Weimar Germany post World War One. They finished paying in 2009. It wasn't that long ago. The British finished paying for the Marshall Plan to the American ZIO banks, which are also owned by the same British banks, but that all got put on the British taxpayer, and they had decades of austerities through the 60s and the 70s. Girls were painting their legs brown with gravy because they couldn't afford stockings. Did you know that? Yes, but the bankers were made whole. Now, what do you do to save yourself from this lot? You get yourself some gold and silver. Links below. Bullion Vault for the small amounts accumulates electronic and internet gold and flip it into full bullion as well. Great idea. Catch you later. Thanks for watching, and I look forward to updating you more as we make progress in the precious metals realm. Thanks for chatting, guys. And don't forget, likes and shares truly are currency. Help us help you. The more we get rewarded for this, the more regularly we can do regular and quick updates. So we appreciate the support on that front. Bye for now.